Let's take a closer look at OMV's financial performance in 2020. 2020 was a challenging year for OMV, following significant unfavorable market effects triggered by the COVID-19 pandemic. OMV achieved a clean CCS operating result of 1.7 billion euros. The financial performance in Upstream decreased in 2020, mainly due to lower realized oil and gas prices, as well as a shutdown in Libya, which lasted until the beginning of the fourth quarter. Early in the year, crude supply rose as the OPEC+ states failed to agree on production cuts, despite diminishing demand following the COVID-19 pandemic. As a result, the Brent price fell and bottomed out at $13 in April. In the aftermath, production cuts and a gradual return in demand, additionally driven by the announcement of the rollout of a COVID vaccine in the fourth quarter, led the Brent price to recover. The yearly average for 2020 stood at nearly $42, which is still 35% below the 2019 Brent price. Oil and gas production underwent a slight decline in 2020. This was mainly due to the shutdown in Libya, which was partly offset by the increased production in Malaysia. Production costs remained at a low level of $6.6 and have decreased by 60% since 2014. The Downstream business experienced a resilient result in spite of the difficult market conditions. In particular, a strong contribution from the gas and retail business supported the overall result, as did significant gains from margin hedges. The downstream refining margin significantly decreased year on year, mainly because of the effects of the COVID-19 pandemic. Total refined product sales also shrank due to the effects of European countries imposing travel restrictions. Natural gas sales rose by 20% in 2020, mainly due to higher sales volumes in all our markets. The market share in Germany reached 7% at the end of 2020. Cash flow from operating activities, excluding net working capital effects, amounted to 2.8 billion euros, a decrease of 35% compared to 2019. This is mainly attributable to Upstream, which was severely impacted by the decline in oil and gas prices. Despite a challenging financial year, OMV's strong and sustainable business model ensures that our progressive dividend policy is being carried out as a sign of our strength and resilience. Underlining OMV's new and expanding focus on chemicals, OMV is well placed to withstand the lingering effects of a global pandemic and well prepared for sustainable success in a broadly decarbonized world.